Good morning, everyone. Thank you for joining us for this session today. Firstly, I would like to thank the entire team here at Lxme for inviting us here again and giving us an opportunity to speak to all of you. Today, on the occasion of World Environment Day, we will be talking about a very interesting topic which actually affects all our lives about sustainable investing and what makes it so important for us to understand this concept, and especially in the current scenario. Before we move into the details of it, let me introduce today's panel. There is Ms. Priti Rathi Gupta. She is the founder of Lxme and she's also the MD of Rathi Group. I think most of you here would be knowing her. There is Mr. Swarup Mohanty, who's joined here, who is the CEO of Mirae Asset India. And I am Suranjana Borthakur. I head business development at Mirae Asset. A very warm welcome to both of you. So I think let's first start with understanding what is ESG and why we are talking about it today. So ESG is basically, it stands for environmental, social, and governance. It's more like a catch-all term for socially responsible investing. It is basically a framework through which it's about analyzing companies and assessing how well they compare to their peers in terms of performance against these particular metrics. So in under E, it's all the environmental factors like climate change, air and water pollution, deforestation, water scarcity, waste management, all of these things. So basically how well a company manages its resources, and while using those resources, are they actually looking after the environment? Secondly, under S, you have the social factors, how well a company is treating their clients, how well they're treating their employees, gender and diversity management, community relations, data privacy, etc. Under G, you have the governance factors. So how well is the governance structure of the company? How well is the company being run? In factors like, bribery and corruption, lobbying, whistleblower policies, etc. So all of this comes under the purview. Now, it's basically, so it comes to the point that it's about analyzing a company, not just based on their financial parameters, but also focusing on the things beyond it. So it's about looking at focusing on sustainable investing and therefore creating a sustainable business model. So not just looking at the balance sheet, but looking at how the company is affecting the society at large. So it's about people, planet, and profit. That is basically the mantra of ESG investing. In current scenario, you would all agree that all companies are facing enhanced ESG risks. Actually, if you look at the environmental side, we keep hearing about increased air pollution, about water contamination. Climate change has become very real and very on the face. We have Leonardo DiCaprio going on Oscars talking about climate change. So similarly, social factors are becoming very, very important because, there is an increase in terms of data privacy issues. There are increase in sexual harassment cases. In terms of diversity management, has become very, very important. In fact, during this pandemic, social issues of a company have come so much more to the forefront. Similarly, in the governance side also, there are a lot of increased regulatory issues that have been coming up. Whistleblower complaints, money laundering issues, corruption, rise in financial frauds, etc. So let's look at a little bit on what is the history of ESG investing. So just to tell you all that, the genesis of sustainable investing is actually not very recent. It can be traced back to the 18th and 19th century where, the Christian renewal movement, which was in England, people who were involved in it, they actually were refraining from investing in companies which were involved in alcohol, tobacco, gambling, etc. But their beliefs were a lot based on, moral, and it was more like moralistic and religious beliefs, basically. But when coming into the 20th century, especially during the 1960s and the 1970s, during the Vietnam War, there was a lot of dissent among the people in US about their involvement in this Vietnam War, especially about the usage of a chemical known as Agent Orange. This chemical was actually used to defoliate forests and also cultivable land in Vietnam. So this entire dissent led to the first, socially responsible mutual fund in 1971. ESG, of course, has its genesis in a 2004 letter that Kofi Annan, who was the then UN Secretary General, wrote to a lot of CEOs across the globe in some of the largest financial institutions, asking them to participate in an initiative which was designed to actually bridge the gap between investors and important ESG issues. The group formed today is known as the Principles of Responsible Investing, which is the UNPRI. And this UNPRI, actually, the members, they are supposed to be, reporting on various issues on socially responsible investing every year. And we know that in the last 2 years, this ESG has actually come a lot more in the forefront because of this entire pandemic. And, it has actually become something which is a very talked about subject. So let's get a little deeper into why ESG investing. So my first question to you, Swarup, what do you feel that, what is there to lose if you do not have ESG as a part of your portfolio?
Suranjana, thank you for having me on and Priti along with us on today's great event and on World Environment Day. I'm very honored to be talking about ESG. You've listed out some of the major factors which led to the rise of ESG, and then we are leading to a world where it is possible there is ESG and there is no ESG. It will be bifurcated into two parts. What started as a morality kind of a subject, which led to mostly exclusion of companies, today stands with a fact backing on why one should exclude or include a certain company. And it is true that, in today's world, you just cannot dissociate yourself from the three P's, that is the planet, the people, and the profit of the company. If any company has to aspire to sustain itself, or I use the word survive, in the next 2-3 decades, or over the next 2-3 decades, it cannot survive without acknowledging its responsibility towards its own people within the company, to the planet, that is the environment around you, and build its business in such a way which inculcates these two, and that as a culmination will lead to its overall profits. So when you put these first two parts, which is the environment and the social part of it, and add a factually based, socially and environmentally responsible governance structure, what comes out is sustainability. And that is why it is called sustainable investing as a concept. We add the term responsible investing because, it's supposed to be something good. Where, one of the largest tech companies in India says that, in God we trust, but the rest have to be backed by facts and figures. What the ESG calculation or the ESG score brings about is this factual fact of this morality. Why is it a good company? Like you said, if there is a whistleblower policy, is the whistleblower policy really, put in place in the company? If there is gender diversity, then gender diversity is no longer about men and women. It is far beyond that. Is it actually practiced in the country? Especially in this COVID times, it completely segregates companies now. There is a thing of saying that we are responsible, but are we acting responsible? All these get factually documented by the ESG analysts. And somebody who, or any company which follows this, eventually becomes a sustainable company or a company which survives. So if one is looking at investing, and I'm talking about it from an investing perspective, and one is looking at the future, if you are not ESG compliant in your portfolio, there is a chance that in the next 5, 7, 10 years, like it's happened in a lot of the developed countries, the companies around you might not be there. That's the thought that one has to believe in. When I started reading ESG 2 or 3 years ago, I thought it was just a concept, it was a fad. But today, it's a firm belief within myself, and I do believe that if my portfolio is not ESG compliant, there is a chance that it will not survive 20 years from here.
Yeah. So Priti, would you like to add your thoughts on why you think ESG has caught on so much across the globe?
So I think I'll just pick up from where Swarup closed. Is I think, and I come in as an investor, right? As a commonplace investor who's looking at ESG listening about it for the past few years and wondering, like, is this something that, like Swarup said, is it a fad? Till you come to a point where you're saying, no, this is an investment discipline, which, that considers environment, social, governance criteria. And the aim is actually to generate, and this should be very interesting, because I think what people have viewed it as always is something that, okay, this is a great social cause, right? This is something good, but how does it sort of relate to, to me making a choice between profitability and doing good, right? And I think what has sort of, and these are again facts which have been brought forth, is that essentially ESG investing has become a discipline where you're actually able to generate long-term sustainable competitive returns along with doing, the good that you're doing, right? In the sense that you're investing in companies that are following the right principles that we as a society would like to believe in, right? And I think this performance trade-off, and this is a question I get asked very often, that, what about performance? What about profitability? And I think what's happened over the past few years is that performance trade-off myth has been broken, right? Which is that you don't necessarily have to make a choice. You can invest, you can do ESG investing, and surprisingly, over a long-term period, it will give you a better profitability. And it's fairly logical now if you sort of take a step back and understand why, right? For example, if there's a heavily polluting factory, or there is a company that is not sort of paying attention to employee benefits, employee happiness, diversity, inclusion, then the chances are that the company's performance over a long-term period is not going to be sustainable and also will be affected, right? And I, as a common person, I'm standing there and I'm saying that why do I have to live in an environment, or why do I have to have a factory or factories or companies around me which are not giving us a better world in the future, right? So what ESG has really done is, all along, because I think either through ESG or impact investing, and they're two separate things, however, but it gave a lot of the institutional investors were really able to sort of come in, make their investments by making choices in companies who are doing the right things on all these parameters. But I think what has happened over the last few years is that it's through the through, say, funds like yourselves, etc., it has given the power in the hands of a common investor, right, to make that choice, to pretty much say that, okay, I as an investor can make a choice of investing in companies and sort of paving way for a better future. So I think it's like saying having your cake and eating it too, and it is a virtuous cycle, right? So there is money coming into companies who are following these ESG principles because they are delivering long-term returns. And because of those returns, you have more and more interest coming into the ESG space. And I think that's the cycle that's being created. And I think most importantly, going forward, I think it's been proved it's not a fad. But going forward, I think it will become pretty much a part of our everyday investing, right? So I actually, Swarup, I don't agree with you that there will be ESG and non-ESG. I think there will only be ESG.
Yeah, fair enough. That was the implication. But I agree that there will be either ESG or nothing.
Yeah.
Also, Priti, would you like to add some thoughts on what role you feel COVID-19 has played in bringing ESG factors to the forefront?
Well, I think COVID has been a great catalyst. I think it's made all of us sit up and think, right? What have we been doing? Particularly when it comes to climate change, environment, it's, obviously these have been highlighted, right? But along with that, I think during the COVID last 1.5 years, people have paid a lot of attention to. So, for example, is the company that I'm working with looking at, how is it sort of looking at my health, sort of if I'm working from home, what is the sort of environment that they are creating? So a lot of these factors. So, for example, we've seen large-scale vaccinations being now, a lot of the larger companies are offering it, making sure that their employees are getting it. Also, I think in terms of hospital benefits, we've seen so much happen on oxygen concentrators, etc. And I think that is where we've seen government does what it can, but I think private individuals and companies and corporates, we've seen huge sort of initiatives by them, right? And every individual going forward, I think, is going to assess that, is this a company that I want to work with, right? Do I want to belong here? So that is one bit of it, which is making companies also look internally and saying, do we need to restructure how we are doing things? Because now it's no longer about how much am I paying you, how much is my bonus, and all of that, right? But it extends to work environment, employee benefits, inclusion, diversity, all of that, right? As well as what is it that I'm doing, right? Am I sort of, am I a part of a industry or a sector which is contributing to the future in a better way, or not so I think it has made all of us sort of sit back and realize the importance of ESG. So it has been a catalyst in all ways. I think there is, and there are numbers to sort of say that. I think the Forum for Sustainable and Responsible Investment found that about within the last 2 years, the amount of money that has come into ESG investing, and we can assume that COVID is one of the primary reasons for it, is almost sort of doubled, right? So it's I think we estimating the figures to be somewhere around I think from $12 trillion to about I think 18 and a half, so which is about 1.5 times the amount that has come in just like 2 years, right? And I'm told that 1/3 of all US assets, and maybe Swarup can back me on this, 1/3 of all US assets are now typically channelized into ESG investing. And I think I'm told that US is not really at the forefront, but there are other countries like Japan, Korea, and the EU, which has taken a lead in all of this. But it's just telling you, if an economy of that size is sort of channelizing funds in the last 1.5 years, 2 years, to such a great extent. So I would say that COVID has been a huge catalyst.
Absolutely agree with you. I think coming to a very pertinent question, Swarup, following all our discussion right now, that, what do you think, what is the scope of ESG in India and how has it evolved here?
It's a very, very important question, because this is our environment that we work in, and this is the environment which we invest in. I think it's just at the beginning, and like Priti is saying, I do believe that COVID is that trigger for the importance or the realization of importance of ESG around us. And then it's already there, whether it's from the regulatory perspective or whether it's from an organization self-consciousness perspective. And the outcome of some of the results post-COVID will just show that more ESG compliant organizations are there is a reason why those companies are favored. I think what will happen, and since it's a global market now, and we don't work in any vacuum, when it comes to cost of capital, or when it comes to borrowing money, or the reflection of any institutional investment in a particular company, at a foremost, these stocks or these companies will be preferred. Hence, the profitability goes up because the cost of capital goes down. For high score ESG companies, that is a given. But slowly but surely, once this starts sinking in more into the Indian companies and the analysts start talking about it more, which they are, there is no, when you go into any analyst discussion or any of the company report, there is no company report at the top level which does not discuss this part of the impact anymore. More important, I think, when you look at it from the regulatory perspective, SEBI mandates now a more stringent reporting structure for corporates, and it's called the Business Responsibility and Sustainability Report, which is the BRSR, which is a mandatory thing for all companies. This is just a precursor for us getting into fast, stringent rules and regulations in times to come. So the advent of ESG is already there. from the industry perspective, we already have 10 funds around ESG, just bringing in the fact that it is a reality now. It is no longer something which we discuss. And then the amount that is coming into ESG investing is very encouraging, since it's just 1 year old from an history perspective. Yes, countries which are more affected by climate, which are the European countries, have woken up larger to the ESG concept, because like just to take on from what Priti said, nearly 50% of European AUM is in ESG. Then comes US at 1/3 AUM, but in the Asian countries, which was late in the waking up to ESG, Japan and Korea are clearly up the ladder there, and India, I'm sure in the next 5 years we'll see a definite growth, because the impact of ESG is such that it leads to better governance and better balance sheets. Thought which we have to keep in our mind is that ESG is an enabler to profits. And it's not an investment. If you follow good practices, it leads to better governance, it leads to better profits. When you look at traditional investing, it was practically the balance sheet and what we call at a top level governance, ascertaining by the fund managers to look at a company. But ESG is down to the last level, the implementation of that governance down to the last, and there is a factual score to it. And sooner or later, you will see the other stocks also aligning to it, non-ESG portfolio stocks. It's a matter of time.
Yeah, absolutely. I think, Priti, coming to a very interesting question for you, that, how do you think the demographic change that is happening would impact ESG investing? For instance, there are a lot of, Gen Z and millennial investors coming into that scope of, the additional investments would possibly come through them going forward. How do you think that would impact the evolution of ESG as a concept? Also, how do you think women perceive ESG?
That's a great question, Suranjana, and I'll speak about the women piece first, because that's what we do at Lxme, and we've got our ears to the ground completely on that one. So it's very interesting, so Lxme has a community of women, right, where there's a lot of sort of chatter and exchange around investing decisions. And I think what we've seen all along, and this is very interesting, because women, the minute they start asking questions around investing, it's all aligned towards goals like children's futures or long-term goals, right? So they are essentially always around security, safety, long-term future of children, etc. And there is a lot that is around what can we do with in the community around us, right? And that is something that we find very interesting and very aligned. So I feel that ESG is sort of, in a way, it aligns completely with the social and cultural values of women. So therefore it is that one go-to principle, right? I'd love to bring out a very simple example. So for example, as a mother, I know that I will make sure that my family and my child is eating the right nutrition, the right food, not because it shows immediate, results, but because I know that's great for the long term, right? So I'm sort of building a foundation for something that is good health, which continues to give long-term benefits, right? So it's just a very simple example to sort of show that this is how women think, right? Also, I do feel that increasingly women are becoming investment decision makers. I think more and more women sort of coming to the forefront, and we see that in Lxme as well, where they want to take charge of their money, they want to make investment decisions, and therefore I think their investment decisions will typically be are very, very aligned to ESG. And that is one part of women as investors, but I also think the other piece is really what role do women play in it? So, for example, there is a stress of boards, company boards having women, having women on the board, right? And I think it's been proven, and it is sort of understood that when you get women on boards, there is more stress on transparency, ethical practices, etc. Because I think the question that we ask is typically, along with how much money is the company making, there is also a question of how are you making that money, right? What are the practices that one is following to make that money? And I think that's really the overriding factor when it comes to women and money, women and investing. How is that money being made? So I do think that women, and of course, all statistics around the world, where ESG has taken off, I think women have shown in a much higher percentage and interest towards investing in ESG companies. So I think they will be the driving force for this, because of the increasing numbers, because this aligns completely with their values, they will be the driving force. When it comes to millennials and Gen Z, I think very clearly this generation is essentially, both of these are, they are very clear on this, not just being intent, but also action. So, they are the ones who are, they see their future. They want to ensure that they are sort of arresting climate change. We are, my children, for example, I have a teenager and a millennial both, and they will make sure that, plastic is not being used, and they won't just tell me, they won't just say, okay, don't use it. They will make sure they're not using it in their everyday life. So I think for that generation, that will be the way of life. That will be the things that they will put their money into, because that's what they believe in, that's what they will follow. And I think that just sort of brings me back to also, the discussion we had, Swarup, which is that will be the only way of life going forward.
Yeah. In fact, I know Swarup really feels strongly about this. If you want to add anything to this part also.
But Priti and Suranjana, I am a big fan of the next generation, the way they think, the way, and then, like Priti rightly pointed out, there is very little gap between the way they think and the way they do. Unlike us, I mean, there's a huge gap. I mean, these are actual stories, and I just got reminded. A friend of mine in Bangalore, he's just come back from Dubai, and he was settling down, and his son wanted a dog, and typically we from Bhubaneswar, our social status is by the breed of dog that we have, and all of us are practically dog experts, especially me, born to two zoologists, and my late father-in-law was a vet. So I immediately, which breed should we buy? So we did a lot of discussion. And then when we went to the son said, nothing doing, I'm keeping a stray. Unthinkable, because then he clearly said why a stray is more suited for the Indian environment and why it is the right thing to keep a stray at home. I mean, that came as an eye-opener to us. And when I look at my son and Suranjana, when I look at you, the way you all think and the way you all do is very different. I am not surprised by what Priti laid down, that, first of all, of course, the responsible gender are women, no doubt about it. So it's not a surprise that women take more to ESG than we do. This is data proven worldwide. And I'm not surprised by that data at all. It comes naturally. But I feel very strongly about what Priti is saying. It is a fact that the next generation will only do this. It will only do this. And there's no doubt or debate on this. They are far more open in their mind. They are far more futuristic in their mind. They think about tomorrow while our generation is caught in yesterday.
Very interesting example on that stray dog, Swarup. I think a lot of us would relate to that. I think just moving. Yeah, sorry.
No, correct. I agree.
Yeah. Also, I don't know what Swarup means by our generation, right? So.
No, my generation. I stand corrected. Sorry, my generation.
So I think, just moving on, now that we have discussed a lot on the relevance of ESG, I would just like to discuss a little bit on, what are the factors that determine whether a company is, good or bad in ESG terms. So just to bring forth the point that, except certain companies which are into, ethically objectionable businesses, it is very difficult to generalize whether a company is good or bad in ESG terms, because ESG is a very holistic evaluation thing. Just to give you an example, that Sustainalytics, which is one of the largest ESG global research provider, they use more than 150 parameters for evaluating a company whether it's good or bad. Now, when you're evaluating a company, it's also very important to evaluate vis-a-vis its peer group. just to give you an example that, if you look at a company in the oil and gas sector, they would always have an enhanced level of ESG risk compared to, let's say, like a company in the IT sector. So it is not fair to compare the both of them. But within that segment of oil and gas, if that particular company is managing its ESG risk well, then it can be, assumed that it actually has a fairly good ESG risk managing framework. So some of the parameters which are used to evaluate the company are how well is the company managing its carbon emission? What are the steps the company is taking towards, let's say, effectively minimizing the contamination of land, water? How well is the labor standards of the company? So is there any dispute between the management and the labor union? Is there a good diversity management in the company? What are the whistleblower policies? In terms of IT companies, the data privacy becomes very important. Interestingly, just to bring forth that within these parameters which Sustainalytics uses, there are some of the parameters which are very specific to gender and diversity management, which is very relevant to our discussion today. So certain parameters like, for instance, human capital development, or discrimination policy that the company is running, or a diversity program. Are they running a diversity program? What is representation in the board? Like, is there a fair representation of both the genders? Or, gender pay disclosures, there's gender pay equality programs. So these evaluation parameters are actually used to give the management score of the company when there is an overall ESG risk rating that happens. So coming back to the point that, apart from, all of the above that I've discussed, corporate governance actually becomes the center of a lot of things, especially in our Indian context, I think, because, if the governance or management of the company is poor, then, investors will anyway be losing money irrespective of which sector the company is working in. So I think moving into a very vital question, Swarup, this one is for you. Are we compromising on returns when it comes to responsible investing? Though Priti covered a little bit on that, but I would like you to delve a little bit more, because this is a very pertinent question which keeps coming from people that, you are doing good for the world, but are you earning for yourself or not?
That's a fair question.
I'm asking that question again. Like, it's double force asking that question, because
Okay.
I'd love to hear you on that one.
See, both Priti and Suranjana, a lot of what I want to say can be Googled also. In today's world of information, getting to data is no big deal. But I'd like to take one step back and reflect on what Suranjana has said as to what ESG score is all about, and then come to the conclusion, because you are talking about 150 parameters. When I'm talking about Sustainalytics, because we work with them, 150 parameters beyond what our fund managers used to do. So where our fund managers end is where Sustainalytics practically starts. You can have a whistleblower policy. Is it being implemented to the ground is what it scores. Right? During COVID, as you rightly mentioned, it's not about the salary or the bonuses anymore, which will play on the minds. But is there somebody who's assessed this company-wise and come to a fact that, okay, fine, if they have provided vaccination for people, good. If they have not provided vaccination, what else have they done? Right? So when you look at that, and then typically want to dispel one basic thought, is that, which Suranjana sort of hinted at, is ESG is not a process of exclusion. ESG is a process of inclusion for everybody. Typically, it is felt that some companies which are harmful to the society or say the climate will be excluded. No, the three factors put together come to a score. So somebody like, say, Suranjana said, one particular industry would score a little less on the climate part. It is given the chance to then make it up through environment and governance to come to a better score. If somebody is inherently as an industry lower on, say, the environment part, you can do a lot on the social part and the governance to make it up, right? So it is a process of inclusion, not a process of exclusion. Now a company which is up on these two and actually practiced governance, I'll again repeat what I said in the first one, is bound to do well in the profit part. That is the outcome. Right? And one has to firmly believe that, and that is why there is a reason why the ESG, when the ESG score is assessed, the company which funds these companies is willing to fund them at a lower rate, right? Global funds are only willing to pick up companies at an ESG score above a certain level. There is a reason, because they are also profit oriented. Today, all analysts are verging on this basic fact, and that fact has to be profitability. If this does not lead to profitability, then what are we investing in? But I'd just like to turn it around and say that when you believe in ESG, you also have to believe that if you follow these parameters, the outcome is profits. And not only profits, but sustained profits. It is a matter of fact. I mean, this will lead to better people management. It will lead to better governance or follow-ons of rules and regulations. So you will have lesser intervention from the government. In fact, you will have more support from the government. There will be less regulatory impact on you. You will be able to imbibe changes much better. I mean, the companies will become far more fleet-footed if everything is practiced to the T. So one can go out and Google, and the fact is a fact that the profits go up is a reality. So I would leave that to the people who listen to me to Google that. But what I want to stress on the fact that if the E and S and G of any organization, for that matter, any individual, is intact, the life becomes better. I mean, today we cannot lead a life without taking into consideration the environment around us, whether we are socially responsible or not, or the way we lead our life. I mean, and in a transparent world, everything is becoming very visible. So, and you are being tracked also, no doubt about that. So, in an environment which is far more transparent, it is difficult to hide a lot of factors. Right, the transparency of a company. I think Suranjana stressed on some of these factors. What I'm trying to say is that I leave it to the listeners to look at the profit part. I am saying with a lot of confidence that this is not profit, but sustainable profit. And companies of higher social ESG score will lead to better profits, because the cost of capital goes down, the holding pattern goes up, and the governance of the company goes up different notches, not just one, or it's not just restricted at the top level management, which the fund management till now sort of assesses, is a reality.
Yeah, so I think covering the point that
I'd like to just add to this. So I think
yes,
one of
please.
the things which Swarup said was, and we've seen this over the last 1 year, right? I think what ESG is also doing is making companies look inward, right? And saying, okay, if this is the parameter now that we are, that there is a mechanism that gives us a score on this, how can we do better? And I think we've seen over the last 2 years, there's been a lot of innovation that companies have been doing to sort of match up to these standards. I think one very common thing, for example, is also to saying, for example, COVID has allowed us to understand that we can now work from home, right? So there can be remote working. So better conditions of working maybe, which has brought down cost, like, Swarup said, for a lot of companies who can do that, but also just made people in the company feel that, we are here to make you or enable a safe working environment for you. And we're giving that priority over anything else, right? So I think it forces a lot of innovative thinking as well as innovations. And I do feel that is very exciting for us when we look at ESG being implemented.
Yeah, pretty bang on, because it's the same thought process. Say when it look at say R&D, lot of people of the erstwhile thought will look at R&D as a cost. But it's only when you look at R&D as an investment, when you make this transition in the mind. ESG is a certain transition. I mean, look at what's happened to the COVID scenario. Irrespective, when you compare the amount of money which, say, Donald Trump, who was so against COVID, but the amount of money he sanctioned for R&D in US is not funny, because R&D is in the DNA of US as a country. Right. So no wonder they came out with the vaccine first, or whatever. The amount of money you put in, it's like that. It's a belief, and that transition is just a matter of time.
Sure. Yeah. So basically, if you manage your ESG, your environmental, social, governance responsibilities, well, in the long run, you ought to make good returns is point I think we're trying to all convey.
Correct.
So now I think now that we've discussed on the returns, my next question to you, Swarup, I think viewers would also want to know that, how much does it cost to be a responsible investor? Are there low cost options available to do responsible investing?
Yeah. Suranjana, when we started thinking of ESG and we look at ESG at a global level, it's a mandate for us to be ESG compliant. And when we thought of doing this a year or two, we thought, what would we do on the ESG? And the fact remains that even today, there is no ESG research available in India, number one. And when you look at 150 parameters beyond what we were doing, it is impossible to set up an in-house research unit to fulfill or do justice to that kind of research that is available. So the natural thing was to depend on an external research agency. In our case, it is Sustainalytics. Now, when you outsource resource, then we asked ourselves, is it wise to then have an active fund? Because the research is outsourced and there is no way you can claim that research to be yours. So our view, and this is our house view, that ESG in the present condition in India, due to lack of any credible internal or possibility of developing an internal rating system, since our research is outsourced, we thought we would keep it on the passive side. So since it is on the passive side, it is the form of an ETF, and people who do not have the demat facilities have a fund of fund to invest in it. The ETF comes with a minimal cost of 34, 35 basis points, while the active funds would come in the normal active funds of ranging between or a max of 0.25. Right. So that's the cost. And then out, if you invest 100 rupees, you are paying 2.25 at a max. So at a minimum of 34, 35 basis points to 2.25 is the range in the market. And then with that, you get a socially responsible and a sustainable report card in front of you. So I think the price you're paying for what you're getting is pretty on the investor side, is what I would believe.
Yeah. So I think there are, passive options, low cost options available. If you want to be a socially responsible investor, you can actually have a low cost product as well to, keep the costs in control, of course. So just coming to the point that, we at Mirae Asset, we do have an ESG product like, Swarup alluded to it, which is a passive product, which is called the Mirae Asset ESG Sector Leaders ETF, and we also have a fund of fund on this. So, when we first launched this product, we were actually the first passive product launched in the market in the ESG space. Also, this product was not launched on a conventional ESG index. This was actually launched on a separate index, which was created by NSE along with Sustainalytics, which is the global research provider for ESG. And this is called the ESG Sector Leaders Index. So now, as we've discussed before also, just to give you a view that, even globally, if you look at the kind of money that has been flowing into the ESG space, the incremental flows have actually been coming more into the passive side rather than the active side. So now that we've talked about this product, the Mirae product that I'm talking about, let me just give you a quick overview of how this product is constructed. So, it is based on the Nifty 100 ESG Sector Leaders Index, right? So how is the index created? So for the first step, you actually end up selecting a particular index. In this case, it is the Nifty 100 index. Then there are exclusion of companies that happen based on certain parameters on ESG which are being reached. For example, if there is a severe ESG risk that a company is facing, that company gets excluded. Then if there is a ESG risk rating score which is worse than the sub-industry average, which means if the ESG score of that particular company is worse than its peer set in that same industry, that company gets excluded. Then there is high or severe controversy. If any company is facing, that company gets excluded. Also, companies which are involved in tobacco, alcohol, controversial weapons, gambling, all of these companies would get excluded. Once the exclusion part happens, then the entire universe which is left over is what is taken into consideration, and then those remaining stocks are then ranked as per their ESG rating in that particular respective sector. And then the fourth step is that the top 75% of those remaining companies ranked as per their ESG score is what is picked up in the index that is created. So if you look at the process that it's followed, it's a very unbiased approach. So there is no fund manager bias or anything in terms of, picking a particular company because the company looks good to a particular individual. There is no such bias attached at all. So because of which it becomes very, very true to label. So that's why also globally passive funds are being looked at as more true to label than their active counterparts. Now, I think coming to the last part, but I think a very interesting part, I would like to ask both of you this question, but I will pose it to Priti first. That are you guiding your personal investments towards, ESG compliant funds, and how do you see this wave actually catching up in India?
So, Suranjana, I think I just mentioned that women are going to be the driving force for ESG adoption or ESG investing adoption, and I think I think I'm playing my part in it completely. So not only just investing, but also within my community, the Lxme community of women investors, really we're starting conversations around it. Where this series is part of just getting the facts out there, right? Because addressing all the questions that are around it, that why ESG, why should one invest in it, etc. So completely, I think going forward, my portfolio particularly is more and more increasingly getting inclined and aligned with ESG investing. And I think, of course, impact is something that, social change it's very close to my heart. So it's something that I believe in. And like Swarup said, I think this belief is not just belief in doing better, but also for a better world. So I could actually say I am investing in a better future and a better world. So totally aligned on that, and also getting this to women investors for them to understand the concept and be able to adopt it. I think funds like yours have made it very, very easily accessible for an individual investor to come and play their part in making the world a better place. So I think completely aligned to it. I actually, while you ask this to Swarup, I would also ask him to sort of answer this whole question. I get a lot of questions on that. If this is the right way of doing things, why AMC is not why are they not promoting this aggressively? And also, is it because it is more expensive? Is the cost of an ESG fund higher than other funds? And, sort of while you answer that, I would love for you to just throw some light on this as well.
Yeah, I think you've asked a very important question on the cost side, which is it expensive? Yes, ESG is expensive because when you're looking at 150 parameters beyond what we look at, the kind of analysts that are involved, the number of analysts that are involved. Just to give you a basic, this thing, Sustainalytics has 750 analysts working on ESG alone. So there is a cost to it. But, the good part of Indian mutual funds is irrespective of whatever the cost is, it is within the cost structure laid down by the regulator. So to the investor, one will always be within that framework of the cost. Our margins might come down a bit. But if we are launching an ETF around 34, 35 basis points, then it's as low as that can be. Why they are not promoting is, I think, is just a matter of time. I think it's just been 1 year. And I'll be very honest on this. I mean, just 2-3 years ago, when I started reading about ESG and sponsor Suranjana also, these 2-3 years have been a realization in the investing process to me as an investor. Because number one, up till now, the data that is available, clearly available, is broadly in the top 50, 150, 200 companies of market cap in India. That data is getting penetrated as we speak. I think on towards the mid of this month is the launch of the first Indian ESG analyst company. So we are seeing the birth of that also. We are seeing the regulator also rising to the occasion with every passing day. So the consciousness or the awareness of this is also rising. So in these 2 years, what happened, and when you are investing, everybody has a core portfolio, and then you have a satellite portfolio. For me, ESG started as a satellite portfolio, but when I started reading more and more into it, and I got convinced with the fact that yes, this is being not just tracked once, is tracked in intermittent times to also ensure whether the score is intact or not. Then you get more convinced with the fact. So by the next 2 years, and this is just a combination of two things that are happening, is that the Indian markets on the equity side are becoming, more and more transparent as the day goes by. And with transparency, the alpha generation possibilities also start narrowing. So anyway, a lot of my core part was shifting to the passive side, the top 100, 150 companies that one owns. And then I have to given a target that the core part of my portfolio by the next 2 years, that is 2023, because there is a fair amount of legacy involved, should move to complete ETF. It's already gone into our ETF a lot because the cost benefit is there. I will not deny that. And if I'm getting that product at 34, 35, why won't I take it? And it's not because it's my product, purely on the merit of the product. And it's a rule-based thing. See, what I'm learning, and I've been an active seller all through, let me confess that. What I'm learning or about passive investing, I always ask, why is the word passive there? It's not at all passive. The underlying of the business is very active. And then when that happens, the good part of what passive investing does is it is rule-based. And that rule is put in place irrespective of market condition. Like Suranjana was hinting at a fund manager risk. Fund manager risk works both ways. The ability of the fund manager to beat the market, it comes with the risk of the fund manager also underperforming the market, because sometimes the rules are not put into place, which is the disciplined part of investing. The passive is rule-based, mathematically driven. So in efficient markets, transparent market, that is why passives take over. In developed markets, all incremental money is in passive investing. We are in the country where both are possible. So this is the legacy, I believe, will continue to beat benchmark, will slowly be there, but the fresh money is all going here.
Yeah. I think sort of there is a question which will be a continuity of what you are saying, that, shouldn't we consider these ESG factors for all our investments?
Yes, I do agree. In fact, if I would be really happy if our fund management team were here, they would tell you in the top 150 companies that they follow, they do track the ESG score very, very meticulously before taking a stock. And it's already happening. It's just a matter of time due to lack of research. And as research start penetrating, you will see that happening across the mid caps. I'm not very sure about the small caps yet. But at least in the large and mid cap, you will see it happening very soon, sooner than you expect.
Yeah. Yeah, I think a lot of questions on performance and cost, I think both have been covered quite extensively. I think one question is, when investing, how do we find the information? Is it mentioned on the fund details? Sort of, if you can address that.
Information regarding?
When you have invested in a fund, as in if you're interested in investing, where will you find?
Yeah, so the beauty of another beauty about ETF investing is your portfolio is disclosed on the day. Actually, you know the portfolio before investing, right? That was one of the questions. We just recently launched a very interesting product called Fang Plus, and people were asking this an NFO and all. So we were trying to tell them that on the ETF side there is nothing called an NFO or anything. The stock is available to you. The model of the rule of the portfolio is available to you. That's the beauty of going that side. Unlike an active NFO, where the fund manager will come and form the portfolio. So the ETF is there in front of you. As Suranjana mentioned, it is the ESG Sector Leader Index. The index is formed by NSE and in collaboration with us. So the NSG, if you Google this, the index is also there in front of you. So the transparency is as good as it can get on a daily basis, that too. While on the active side, we disclose it once in a month.
Yeah.
Also, I think it's interesting that we have, I think there were a lot of questions around, is just the measurement of ESG vague, right? And I think it's been great. I think it's good that, you shared that there is there is a science behind it. There are tools that are used to measure, and it's not just just an assessment of like just an assessment of a qualitative assessment of saying, okay, this is a good ESG company and this is it. So I think that gives a lot of comfort to investors, knowing that there is a tool that is measuring all of these, and then you also know which are the companies in it, how is that investing done, etc. So I think that's the beauty of also investing through funds, right? You exactly know where you're putting your money in. So
yeah, in fact, Preeti, the whole fact is that why ESG has also come so much more in the forefront now. Like I said, the main ESG thought was started in 2004, but the metrics of evaluation, the entire, how it would be defined is actually becoming clearer with every passing year. So because of which in the last couple of years, actually, it has become even more clear how these evaluations would be done, what are the parameters that would be, and therefore we know things it's fairly quantitative now. It's not just qualitative anymore. So
absolutely.
Suranjana, the pressure on the company then grows. Just give you a small example. Suppose I at Mirae Asset, suppose for some reason we have not vaccinated our employees, or we've not, since we are a small group, we could not find a vendor to come and vaccinate 40, 50 of us at all. So the pressure is on us. Suppose we are an ESG rated company, to participate in some COVID activity or the other. That is what it does to companies. The pressure is on the company then to live up to that score. I'm just giving just an example, because that's the thought now in our mind, that because my head office will ask me, okay, fine, this could not happen, I don't know how it works in India, in Korea we did it, what are you doing next? So it's up to us to come back and demonstrate, yes, we've been responsible. Yeah, the HR is trying to talk to all of us, trying to fix up appointments, doing all that. But, when it is compared to, say, another counterpart who's had a camp in their own office, that company will score over us, is a reality. And that's how it works. It pushes, and peer pressure on this count or score pushes each one. And you are as fast as the last member of the group. You have to really put it up. That's the beauty of a score. The competitiveness grows. In this case, the competitiveness only makes the entire environment of companies better.
Yes,
true.
Totally agree on that one.
You've given a great example. I remember speaking about ESG. Somebody when I was studying at Harvard 4 years back, somebody was talking about ESG, and I said, "Oh my God, these first world problems." Thankfully, we are not dealing with it back home, but I think it's here to stay, and thankfully so, right? It's a reality for us, and great, we have tools now. And I think you've just shared like how there is pressure on companies to now sort of live up to those, and make their own scores on ESG.
Yes. I think there is a question also on, will LLP companies come under ESG? So I think I just wanted to address that today it's becoming increasingly more important for companies to declare, information which is which is required to evaluate a company on ESG parameters. So today, if you see, most of the large cap companies actually are in the universe where they have all these parameters readily available. It is going into the deeper segments, also the mid caps and the small caps. But I think sooner than not, all companies would have to get conscious, have to have a sustainable development, a business model which works out for them in the long run. So nobody can sit back and relax and think that okay, this is going to come at a later stage to them, and therefore they don't have to be cognizant of these issues. There is also one,
Suranjana, even more if you're looking for an investment. So if you're wanting to attract investment, it actually becomes very, very critical for you to start following ESG principles from day one, because I think investors will look at those principles.
Absolutely agree with you on that. I think the more you're cognizant, the better it is to, let people know that you are conscious of what you are doing. There was also a question on a minimum amount of investment in ESG funds. So I think just wanted to address that it depends on the product that you're investing in. Like we discussed, there are passive products available where your cost, where the size of the investment could be very low. If you're investing through even a mutual fund route, your minimum investment could be as low as like 1,000 rupees or 5,000 rupees. So it depends from product to product. There is no defined number that, this is how much is the minimum you can put into any ESG product. It will differ from, each product. So I think that's
and there is a comment on that, Suranjana. There's a very nice comment on that by Tashi, and she says, changing the world or saving the world, SIP at a time. So you can actually do this one SIP at a time. Yeah.
Absolutely, that's a really nice one, actually. So you also have the SIP route for getting into ESG investing. So I think that's more or less most of the questions we have covered. So I think thank you so much. Thank you for giving us this platform to come and talk about, something which is so relatable and so pertinent today, and going forward is only going to become increasingly more important. So thanks for giving us this opportunity. It's always a pleasure to talk to both of you. If you have any closing comments, Priti, if you want to add anything.
I think on behalf of Lxme and for myself personally also, I think this has been a great conversation. Thank you for coming here and sharing this insight, because I think firstly we are getting ESG portfolios very soon onto the Lxme platform, and we really wanted these conversations to happen. I think you've shared a lot of light on how they're structured, what is the scoring system, how does one invest, why should one invest into it. So I think for me it's personally been great having this conversation, but on behalf of Lxme, thank you so much. And I think you've got now, an entire community of women now actively looking at ESG investing.
Great. Swarup, any closing comments from your side?
I'll always remain thankful to Priti and Lxme for giving us this platform to talk about something which is very close to our heart now. It's a belief which is getting stronger day by day, and so heartening to see her coming out and speaking for ESG in the positivity that she always brings to the table. So thank you so much for this opportunity. Really appreciate. And on World Environment Day, I wouldn't have thought of spending it in any other way which would have been better than this. So thank you for the opportunity. Really appreciate.
Yes, thank you so much.
Thanks a lot. Yeah, really appreciate.
Yeah, hope we've been able to have a meaningful conversation which has added value to all our viewers. So thank you so much for joining in today.
Thank you, and happy World Environment Day. May we all work towards making a better world for us in the future. Thank you. Thank you, Swarup, Suranjana. Thank you so much. Bye.